scientific study. Famed celebrity blogger Lucien.com says Gore had his head up his exhaust pipe. Ouch. Now, that's an inconvenient truth. That was Lucien, not me. I would never say such a thing. Let's bring in our all-stars. We have Kudlow and Company contributor Jerry Boyer of Benchmark Financial. We have CNBC contributor Vince Farrell, Scotsman Capital Management. Fritz Meyer just showed up on the scene. He's senior market strategist in Invesco AIM. Joe Lavorgna of Deutsche Bank, and Kevin Kerr of Kerr Trading, editor of Resource Trader Alert. Kevin Kerr, I guess we're going to lose you before too long, but you're the man. Oil is the last best hope of the economy and the stock market and inflation and almost everything else, Kevin. First of all, give me your quick take. Why did oil drop 16 bucks this week, kind of out of the blue?
Yeah, we're really seeing that capitulation. You know, when I spoke to you a week ago, I said I was short oil, and this is the reason. We're seeing all these technical levels, Larry, just getting breached. You know, we closed below the 50-day moving average. We're hitting all these key technicals. Now we're closing below 130. You know, it's clear that oil is pulling back for many reasons, but also the fear factor has abated a little bit with this whole Iran-Israel thing. We've got enough supply right now, and basically demand is waning a bit. We're starting to see that come into the market.
I think we have a chart, by the way, of oil that shows at least this year's trend line. Oil has breached it now on the downside, if we can get that up. There it is. That's oil. I think that's year to date. You can see at the upper right-hand side, it breached the trend line, as Kevin just said. Now, Kevin, I don't think Bush, I know a lot of people are down on George Bush, but without getting into that whole conversation, he came out with some incredibly strong and surprising statements revoking the executive moratorium on the offshore drilling. Then he came right back the next day on, I guess, Tuesday, and slammed away on drill, and slammed away on Congress to put the pressure on, using the opinion polls, which shows the nation, what, 2/3 of the voters now want drilling. They've pulled back on climate change and global warming and Al Gore and his own exhaust pipe. So, Kevin, a lot of this is going to ride now on what happens to oil in the next couple weeks. That's the key point.
Yeah, that's what worries me, Larry. You know, if we see too quick a pullback here, that some of that momentum that we're getting, some of these changes that we're hearing about, and let's face it, you know, the Outer Continental Shelf has been shut down for 30 years. It's going to take a while to ramp that up. We need to keep this momentum going. If we see too big a pullback in oil prices, a lot of this could come to a grinding halt. So part of me really wants to see these prices pull back. The other part is, well, this is what's helped motivating what we need to do.
Well, you take $100. I mean, look, if it went to $100, now come on. Let's be. If it's above 75 or 80, wouldn't that be very profitable? Wouldn't that incentivize drilling and all the rest of it?
You would sure think so, but we've been above that for a long time, and it really took when we got up to 140 to start having these conversations about drilling offshore. You know, at 120, 110, you know, nobody was really that motivated to do it. So I'm a little concerned we get back down to 100 or 98. That we're going to go back to, well, let's wait and see, let's hold off, and that's going to be a mistake.
Now, Joe Lavorgna, no decent Friday evening show would be complete without our usual pessimist. That's why we love having you on the program. I'm glad to see you're smiling, buddy. If you get this continued decline in oil, for whatever reasons you can conjure up, this would shake you from your recession forecast, would it?
I don't think so, Larry. I mean, certainly oil at to 140 and change is a problem, but you know, let's not lose sight of everything else that's going on, which is declining home prices, declining wealth, slowing income, tightening lending standards, and oil layered on top of that. So, you know, I think when all is said and done, we will still show a recession. Probably started in January. But I'm really worried more, Larry, about the second half of the year. And yes, we had a nice bounce in stocks. I think it's short covering. The S&P didn't move as much. And I think some of that was due to the naked short selling rule by the SEC.
We can't sell financials anymore,
no,
can we, Joe?
Well, we can
buy them, but we can't sell them. By the way, I have a real problem with this.
We can sell them, Larry. Yeah, but we could sell them. But look, they were really just beaten down so hard. I hope the sector's turning. But again, I think a lot of it is a function of the securitization market, and that's really a call on housing. And I just don't think housing prices have stabilized yet. When that happens, then I think you get your arms around this credit crisis and think things are really getting better.
So, Jerry Boyer, to me, this whole drill, declining oils, this is the last best hope of mankind. I mean, there's nothing going on in Washington. Bernanke did not attend to the dollar when he spoke. In fact, he was his usual gloomy and doomy self. This Freddie Mac, Fannie Mae situation we're going to talk about in a few minutes is completely screwed up. Nobody knows whether it's going to be the greatest bailout or not. No one can be certain about that. The data are mixed, but certainly the inflation numbers were quite high. Maybe some better news on industrial production and sales. But to me, to beat the malaise, Jerry, it's got to be drill, drill, drill. We got to get oil prices down, put more oil supplies on the market, create jobs, America first. How do you see it? Is this pie in the sky, or is this realistic?
Well, you know, the way I look at it, in the late 70s, the shackles on the economy were high tax shackles. It was the tax code that was keeping the entrepreneur from functioning and hurting financial markets. That's no longer the case. We've sort of settled the tax question. For the Western world, everyone understands that low tax rates are good for growth. Now, the new set of shackles are green shackles. They're shackles imposing limits on the ability to procure energy and to use it. So what taxes were to the supply side revolution of 1980, energy now is to the supply side revolution of 2008.
I like that. So the American Physical Society, an organization representing 50,000 physicists, has reversed its stance on climate change and is now proclaiming that many of its members disbelieve in human-induced global warming. They are now sponsoring, they want to have a new public debate on the validity of the science. The leadership of the society had previously called the evidence for global warming incontrovertible. They have completely changed. That's 50,000 physicists, no gynecologists in there. And you had this Oregon study, right? The petition out of Oregon had 30,000 scientists, no gynecologists like the UN petitions. So, Jerry, I mean, the tide may be turning. It's sort of interesting how it's all coming together. The scientists are changing their views about global warming. The public wants drilling. Now what's left is Washington. Bush has played his hand rather well. Even John McCain woke up from the dead on this. Give me a forecast, Jerry, because you know what? I think the fate of the stock market for the rest of the year may well hinge on oil prices and the drill, drill, drill legislation.
Yeah, now to be fair, most gynecologists might be in favor of drilling for all I know.
Oh, that's right. That's a good point. We just said that the because they don't have expertise. But you're right. They are, after all, important humanoids.
See, the thing about this latest report is these are the scientists who actually do math. You know, you get these environmental scientists that, high school algebra is a little too tough for them. They're basically activists. They're really heavily involved in the cause. But physicists actually do math for a living. They actually work with real-life models. They're really quantitative. And they're pretty serious about what they allow their names to be used to endorse. So I can see them getting serious about this and saying, you know what? Yeah, there's some increase in temperatures, but that doesn't have to be caused by human emissions of carbon. That could be caused by something else. Also, the data is inconclusive. The serious scientists are now starting to talk, and maybe they'll be heard over the activists.
So, Kevin Kerr, before we lose you, for heaven's sakes, well, give me a take here. You know, I mean, I need a price forecast. It's very important. It's going to change Joe Livornia from a bear to a bull. It's going to reinforce my natural optimism. For all I know, it may even change Gary Schilling, who's finally showed up here on the set. Give me a forecast, Kevin Kerr.
Well, these are wild and woolly times, Larry, but, you know, we got to remember expiration is coming up next week for this August contract for the crude. We normally see selling in the front month and buying in the back, but I think we're going to see more weakness, and the next key level is going to be 120.63. And that is the 100-day moving average, I believe. And below that, there's just air. So that could be the impetus to go back down to 100.
Well, that air towards 100 could be the savior of the entire economy. I mean, Joe Livornia, let's be serious. If you saw $100 oil after ticking up to nearly 150, you'd become much more optimistic, wouldn't you, Joe?
Larry, I would. But let's say this. I mean, this oil move isn't just pure. Yes, it's technical, but there's no question if the U.S. economy is going to underperform this year and next, as I believe it will, the commodity surge never really made a whole lot of sense. So part of it is the expectation of weaker U.S. demand. But you're right. If it's 100 or less, you do have to be more optimistic.
Well, what about, Jerry Borer, you listen to Joe. It's all demand side. He doesn't understand Jerry's supply side. If you put more supply of oil on the market, the price will decline. It's a funny thing. Joe just doesn't get that, Jerry.
Yeah, look at the 1980s. We had incredible growth. And what happened to oil prices in the 1980s?
They fell. They crashed.
So that crushed the Phillips curve once again. We got to throw that out.
The supply is relatively inelastic in the short term. I'm not sure about
I don't agree with that.
Drilling in Alaska is really a fundamental factor. I think if you look at where the demand is coming from, it's been more of a demand story. Asia, and in particular, the Middle East.
I think deep sea is actually pretty elastic. I think Santa Barbara could start pumping in a year.
You know, that's what they're saying.
I don't live in California, but I certainly wouldn't want pumping outside.
I don't want to trump the story. You guys are going to love this. We got a greenie who's had